Mic check, mic check. How's everyone doing today? Mic check, 1, 2, 3. Hello, hello, hello. Welcome to Al Stock Trades. In this video, we're going to go ahead and do a quick recap on the Canaccord Genuity 43rd Annual Growth Conference. This is not a healthcare conference. It's a growth conference where companies are basically focused on, especially analyst companies, focused on growth. As we know, this gentleman here has been covering Clover for quite some time, and I'm just here to basically summarize the main topics and the main take-home messages that I got. And if you want to watch the full broadcast, it's available on the Investor Clover Health Relationship website here. So very quickly, the thing that stood out to me is in the beginning, Andrew Toy was given an opportunity to go ahead and discuss, for people that are first-timers in hearing about Clover, what they do. We then went ahead and talked about how they were able to decrease their MCR in the 70s, and talked about the population in which they serve. The population in which Clover Health is targeting is normally and historically a population that healthcare insurance companies have basically not wanted to enter because of how much money this particular population cost. They're able to essentially make a profit off of these people, but not by destroying the care. In fact, by improving their care and increasing decreasing their morbidity and mortality through one of the studies, for example, the chronic kidney disease, which we went over the science if you want to go check it out, in terms of what is a CKD stage 3, and then 3A and 3B and 4 and 5, and we even went into 1 and 2. But overall, it was very successful. They went ahead and stated that, Andrew Toy said, we could have easily gone into Florida. That's where all of the Medicare Advantage and Medicare folks are, and that's where all the insurance company went. But we wanted to basically go in areas in which we know we will thrive, areas like where they started in New Jersey. We then, the gentleman at Canaccord went ahead and asked, but stated that, congratulations on your first EBITDA profitability. That's a big deal, guys. And what we're going to start seeing now is a lot of institutional investors, a lot of whales, a lot of big money is going to start coming in. And we're going to start seeing major price fluctuations and major buy orders on the option 2 data. Just very quickly here, just to show you the power of what we see here, let me just go ahead and share with you this particular screen. So overall, this is Clover Health. This is the 200-day simple moving average. We talked about this multiple times regarding the stage analysis. We're going to do some technicals right now and basically do some interesting comments. So as you can see, Clover, after its short squeeze, it's basically been put to sleep. Anytime it gets to where it tries to cross the 200-day, it just goes to sleep. And now we finally went ahead and we crossed the 200-day moving average. But guess what? We've been maintaining it. No matter how much people say, we've been maintaining it. Today, there is, I would say, a little gap here, but we still have these wicks. Today, the stock price shot up literally almost in an exponential fashion. It went to $1.63. There was a lot of FOMO in buying. And a lot of the people that bought in at 70 cents, they're okay with a doubling in money in terms of short-term money, that don't understand the fundamentals of the company, don't even care about the fundamentals on the company, and don't understand that this is more than just $1.63 stock. I'm hopeful that they got out. But again, traders will come back. That's just how the name of the game works. But overall, this move here should solidify in your mind, especially given the volume so low. Still higher than what we've seen. But if you go ahead and go back to where Clover used to be, the volume was quite enormous. But needless to say, we are getting into an awakening of Clover. The beast is finally awakened. And it's just very nice to see this, because all of your guys' hard work, all of your due diligence, all of your patience is going to be rewarded now. Okay. So let's go ahead and quickly just use our stock terminal here to look at some important pieces of data. So first things first, we're going to go ahead and take a look at this AI, artificial intelligent planted, a technical analysis grid that you just basically type in whatever ticker symbol you want, and then it basically gives you the graph. And again, if you want access to this, you can go through the company, but they charge around $60 to $70 a month. Versus our platform, we have a lifetime access component, which is now $500 off if you use Profit, or a monthly subscription, which is a fraction of the price and includes way more than what you would be getting if you were to get a individual solo license. So overall, as you can see, we had the $1.63 resistance line here, and unfortunately, there were some people that were buying around here. And if you had this graph at your disposal, you may have been able to save yourself some money if you chased and did some FOMO. A great time would have been here, but most definitely when we were talking about it in the 70 cents. But overall, most folks are going to be averaging up, which is completely fine. I think I would stop at around, for me personally, at around 250, maybe 2, 3, max 3 for sure. Let's go ahead and take a look at the weekly charts here. This will give us a little bit. First, let me comment on this for a sec. So the biggest thing now, if we pass $1.63, we're definitely go higher. The question is where? I'll show you in the next graph. Right now, we're in the positioning of $1.31 and $1.51. So definitely, we're going to be watching these levels. This has constantly remained a great support and resistance line. And if we can pass 51 cents, we're definitely going to shoot up and we're going to test the $1.63. Now, very quickly here, we can go ahead and do the weekly graph, and you can see how fast this is. Again, back in the day, beautifully, Clover was trading above $10 region. Once we pass over the 419, we're definitely going to explode. But again, these explosions down here are nothing to frown about. So as you can see, we have a resistance line here at $1.29, and we've obviously maintained above that. As you can see, we can go ahead and look at a more easier graph rather than the technical analysis grid that we pulled up. And you can see we're at $1.39. Congratulations to all the people that got in a month ago. You're 56% up your money. 6 months ago, if you caught the dip down here, congratulations. In overall year to date, we are up 46.32%. On average, if you look at the SPY, I'm just a little curious right now. It's up 17%. But let me see S&P 500. I want to look at the big one. It should be the same here. Yeah, 16.83%. So overall, we're beating the S&P 500. And again, nothing to write home about. We're still significantly down. But again, people that bought down at a level of 70 cents, like all our stock terminal members and mastering stock market students, we're sitting pretty great right now. So the next resistance line is going to be 265, so $2.65. But once we pass, I believe, the 163, we'll have a very high probability of getting down to 265. And then you can see kind of the level of where we're basically hopefully going back up to where we used to be in breaking 52-week highs and even more. So another thing we're going to go ahead and do is we're going to do a more interactive chart right now. This is another thing that's part of our stock terminal, TradeMaster. We're going to go ahead and load up this wonderful graph here. And what we could do is we can look at the picture here, but overall we can go ahead and open up an interactive chart that anyone can basically look into here. And we can go in and pretty much zoom in really quickly here to look at some interesting Fibonacci sequence retracements. And again, these Fibonaccis are actually quite lovely because they're automatically pre-planted and you don't have to do them. And there's a couple of lines here. They're all defined here. This 200-day simple moving average is the solid blue line, which you can, if you just put your thing here, you can see the $1.26 is a 200-day at this particular time point. So you can see kind of where the 200-day is. But overall, this is where we are right now. These are the Fibonacci sequence retracements. We needed past $1.42 That's been kind of the difficult part right now, the battleground. And like I said, $1.37 has been a line of support, which we basically have seen down here when CLOV was oscillating around this $1.37, $1.38 region. It was trying to establish support in this particular resistance line and support line. So we have two different types of levels of support. We have these automatic support lines here that are in dashes, and we also have the larger one here, and then the Fibonacci. So you can see once we pass $1.42, we're going to be up our merry way, and the next level of battleground will be here. Overall, from the MACD side, we've exploded, and now we're basically finding ourselves a reversal potentially, or maybe continuing to bleed. Regardless, this is more short-term thinking. We like to do more long-term, which I'll explain my thinking, what I mean by long-term. So that's kind of the analysis here. Again, we have a 7-day free trial for people that are interested and wanting to mess around with this and everything that we offer here in terms of our Owl Stock Trades and Stock Terminal platform here. So let's go ahead and let's do a quick little talk right now. And then, and we have Mr. Seedless Green here. He said that in earnings call, he said that the MCR they achieved was the best ever. Was he meaning for Clover or ever, or for like any company? I always like to be conservative with my comments before I do my due diligence. I know that this MCR is actually really good, better than what I've seen in other healthcare companies. And you hit exactly what I wanted to say on the knob. I never thought, and never really in my mind was thinking that Clover was going to go ahead and take on the behemoths like United Healthcare and Humana. But I did honestly, because remember when my price targets were around $40, $45, I did believe that Clover would be a $20 to $25 billion company. Not so much as Humana, which is $60 billion. But again, what people don't understand, and just kind of very quickly to review, you have HMO and PPO plans. HMO are pretty much restricted in terms of you basically see the doctors that your insurance covers. And if they're out of service, you would have to basically cover for them. PPO plans are designed to where you choose the doctor that you want. And someone who's going to be a doctor myself, we've seen that patients want to essentially be able to control and pick the doctors they want. I mean, heck, we live in a freedom. We live in a country of freedom of choice, freedom of speech, and freedom to do what the hell you want. Another thing is, culturally wise, patients want to see doctors that share the same cultures that they do. So overall, PPO plans have historically been expensive, but Clover is offering them at a cheaper alternative to HMO. So of course, people are going to go ahead and switch over. The issue lies in the cash burning. Like, for example, of looking at insurance versus non-insurance revenue, the non-insurance side has been now finally at break even, which is in what the Canaccord analysts congratulated Andrew Toya. But the difficulty here is, when are they going to go to achieve the profitability for a non-insurance side? And the goal is, they would need to prove that their Clover Assistant actually works. Well, without a certainable, unreasonable doubt, the Clover Assistant has proved itself on the insurance side by dropping the MCR in the upper 70-ish region in comparison to what Humana is. This is actually really good, because if they can apply that same philosophy onto the non-insurance side, using AI and even machine learning and even more deep neural networks, there's different stages of AI. AI is kind of an umbrella term, and I work in AI. And in fact, I'm getting a master's while I'm going to be in, fingers crossed, in neurosurgery residency. So that's kind of the idea of the understanding of what they're going to do with the non-insurance side. They're going to most likely use the insurance side to basically show that their business model works. And in the Canaccord interview, in the analyst interview, they went ahead and said they're going to start diluting shareholders in terms of raising capital, not so much to raise capital to basically sustain the business, because they're in a level of complete extinction. No, they could survive from their insurance side and say, we're just going to basically turn off the non-insurance side and just become an insurance business and not focus on non-insurance. But what's going to happen is investors and big money is going to say, well, if you can go ahead and adapt this to your insurance side, we're going to go ahead and fund you for your non-insurance side. And that's when Clover is going to turn on its growth spigot. And that's when you're going to start seeing some fluctuations. There's going to be a lot of idiots out there. They're going to look at this insane revenue growth, and they're going to say, oh my God, this is going to, and what they're going to do is they're going to price in, the stock market's going to price in that price. And then what I'm afraid will happen is Clover will do a quick share offering. And then it's going to drop the stock by maybe 20%. I'm speculating right now, in order to grow. But again, that's okay because they're going to be growing and getting more revenue. And then that revenue will soon, when the MCR becomes appropriate, becomes profitable, and the cycle rinses and continues. But again, our goal as investors is to basically look at the intrinsic value calculation, which we've been talking about since the inception of this channel and the inception of our stock trades, and use it to where maybe we, sell half and then keep the other half right in, and then play with the other parts. When the intrinsic value calculation reaches its price target, they do a share offering. And then obviously, hopefully, it won't be, the share offering dilution would not reflect equally in the stock price drop. Hopefully the stock price drops even more under the actual intrinsic value, in which you basically rinse and repeat. I know that was a lot. Repeat the video if that was too much. So overall, what I'm basically looking at right now is I'm seeing a company that basically achieved an important milestone. They're focusing on profitability. And now other companies are basically saying, well, when are you going to do growth? When are you going to do growth? No one's happy. Okay. We want profitability. The market wants profitability. We're not out of the woods yet when regards to inflation in terms of wage growth and what the Federal Reserve is trying to battle. Once we achieve profitability, in which this is an important milestone, we're going to see a lot of people start coming in the company. Once Clover gets to $5, $6, $7, $8, we're going to have already multimillionaires already from all of the hard work that people went ahead and basically did. And when the price was around 70 cents. What I do wanted to add, and I'll end the this YouTube video here off of this particular comment, is I'm really sad about this particular person, but I use his example as a learning lesson, and by no means necessary do I advocate to make fun of this person. This is just for educational purposes only. So this particular person posted 3 months ago on this Clover Health Reddit page, and he specifically stated, regretful mistake, selling at the bottom and missing out on potential gains. I feel like such an idiot. I believe this would be priced at 40 cents based on what I read online. And again, I do agree. There was a lot of 40-cent speculation on the internet, on Webull. In fact, I honestly, I really don't like people to spread FUD like this. But that's how people are. I mean, this is the world we live in. There are people, that live by morals, and there are people that don't live without morals. This person got caught up with this drop in terms of this particular, 40 cents, and all the negativity that happened, based on what I read online. So I'm going to continue reading. So I made the decision to sell at 72 cents. It turns out I sold at the absolute bottom. I had 50,000 shares I purchased at $2.54 each. I guess that was his average. I missed out on a potential gain of 17,000. Again, this was, does it tell me the date? Yeah, right here. This was on May 21. So if you go to May 21, it was around $1.07, and now the stock went up another 30%. So, I mean, he probably missed out on even more gains now. As the price quickly rebounded to over $1, now I'm unsure whether I should buy back in or simply wait for the price to drop. FML, which is an abbreviation for, you already know, I'm not going to define that. So there's a lot in here to unpack, but let's just calculate. He had 50,000 shares at 254. So he had around $127,000 he invested in Clover, or she. I don't know the gender here. We'll just assume he's a he for now, or just they, or whatever you want. And he sold that. There you go. He. I guess my brain's going with he. He sold at 72 cents. So let's go ahead and do the math here. I can't type here. Let me add a 7. He sold at $36,000, and he originally bought at $2.54 at 127 minus 36,000. So he sold at a $91,000 loss. He sold at a $91,000 loss. Yeah. So, and I don't know if he bought back in, but again, the concept is, I don't know if I should buy back in. Pretty much, I don't want to be mean. I'm not trying to make fun of this guy. I'm just giving the concept here. The epitome of retail investors to buy high and sell low, and then buy high again and hopefully not sell low. This is exactly, and my 10 years in the stock market, now 11, 12, God knows, it's been definitely a long time. I have gray hair now. It's unfortunate. I'm balding here. It is what it is. That's the stress of trying to achieve a lot in such a short life. But it is what it is. I've seen this countless of times, and this is exactly what I wanted to basically tackle by creating the channel. And I feel sorry for Mr. Thin Pop here, 3519 here. I really feel bad for the guy. It's unfortunate because let's assume he just doesn't like Clover, and he wanted to sell at that $1.61. If he would have held just 3 months, $1.63 minus 72, $1.91, 50,000. If he would have just held for 3 months, he would have made an additional $45,500. And again, that's just the way the stock market works, right? He sold near the bottom. The bottom was actually 71 cents, but still, just imagine knowing that you sold near the bottom. And then the stock, literally, he sold, was it here? When the hell did he sell? So he sold in May. Potentially, I'm hoping he bought back in July. Maybe he bought back in here. He sold at 72 cents. So maybe he had an opportunity to buy back. I'm going to say any updates? Any updates? I'm curious to see, maybe he did have an opportunity to buy, which is amazing. 78 cents here, not your 72, but just it just shows you that when he sold these 72 cents shares, our group in Smart Money went ahead and bought it from him. Like, he basically took his hard-earned cash. It's a sum zero game in the beginning, and then the intrinsic values plays into effect. Options is a sum zero game. But he took his hard-earned money, bought high, then sold it to us at a discount. Almost like if you have a T-shirt and you buy the T-shirt at a discount, you want to buy more. So we essentially took his money. I'm being harsh a little bit here to give you kind of the idea here. But again, how do you know if you're in the right company? And that's when we did due diligence. Look at the due diligence I've done on this company. It takes a lot, right? It takes a lot. So we went ahead and discussed it here already in the beginning. I gave you my highlights. Let's go here really quickly. Let's answer these questions. What do you think next week's options? I love the stock, and if we stay above 150, we could fly. Absolutely. We did some technical analysis. That's why you don't focus on the news and just focus on intrinsic value. We'll see what the news is tomorrow. The psychology of investing. Honestly, guys, half of it is psychology. 30,000 shares. I see a great future. If that happened to me, I would go all in on meme stock plays. I know, man. It's sad, man. Intraday swing, Clove, all through 2022. We could make a serious move with a good CPI. I'm just excited about tomorrow. Exactly. I'm excited too. I mean, who in here? Well, let's just pop again. I can go ahead and hire an editor and make a great editing video and make it short for 7-8 minutes. And I don't care about views, or I just want to help. I'm more of an academic person. So academics, we don't really have a lot of people in our lecture group. So I'm used to a small group, which I honestly prefer. So isn't this exciting, guys? I mean, you guys have been with me through thick and thin. Isn't this exciting now to see your baby grow? Isn't this exciting? I mean, pat yourself on the back. Okay. Seriously. Okay. All right. Let's see here. The only question is if there will be a crush in the market or not if we recover. Honestly, any drop in Clover, I'm very happy. As you know why. Perfect. I actually don't want it to go up until I get enough shares. Yes, exactly. Exactly. Now we know it's profitable. Hopefully the news isn't that big, and we will have more opportunity. And hopefully this gentleman here was able to buy back in. I mean, hopefully, because he sold literally near the bottom here. So, yeah, guys, I just want to basically say, I don't want to sound cheesy or anything, but I really appreciate you guys coming onto the channel. I appreciate you guys, being here and staying through, thick and thin, and hopefully in the future we could do a Clover party or something in Las Vegas. We all deserve it. And take all of our gains and then bet it on black and roulette. I'm kidding. I'm kidding. But it really means a lot. We were in this battle together. Wall Street's not fair. It never was fair. But we have an opportunity here to basically be able to help and be able to talk and pass ideas. All I see for the majority of it are tailwinds, which means that wind blowing with Clover against their booties to a positive future, because I see so many Americans turning 65 every day. I'm in the healthcare system. I see the broken system. We'll make another video in the future regarding Andrew Toy's remarks on large language models. I think we're in the era of AI, and it's very safe and fun to say that we are actually in an AI stock. And once people realize this, I believe the revenue multiples will start reflecting that. Right? Just very, it's very exciting. So pat yourselves on the back. Job well done. And yeah, I mean, this is it. This is what Wall Street's all about. You went ahead and did your due diligence. Company's doing well. It's going to become profitable next year. It's going to grow, and it's going to grow from a profitable basis. So your chartered financial analysts, your CFAs that are level 1, level 2, and level 3 certified are going to basically do their calculations and say, hey, the business model has been proved, and let's go ahead and invest. And they're going to see multiple SEC 13F filings. And yeah, I'm very excited for you guys. I'm excited for all of us. And let's go ahead and get that transfer of wealth. All right. So it's a privilege and honor, and I'll see you on the next one.